welcome to our second webinar of our FutureBets web series. To all of you who attended our FutureBets on conference last year, you would know that we were very sad to cancel this year's event in the wake of COVID-19, but we are very excited to take it online, where you can listen in to some of the brightest minds from all over the world from the comfort of your couch. Case in point, our guest today is coming to you live from Chicago. Also check out www.makefuturebets.com for our upcoming webinars and our stellar speaker lineup. Before we start, I would quickly like to introduce our group to you. Ashika Group is a 25-year-old diversified financial services group offering services such as brokerage, lending, investment banking, wealth management, and asset management. Our team of 300 plus work together to provide services to over 125,000 retail clients, 100 plus institutional clients, and 100 plus family offices. And very briefly, I, Ishita Jain, will be your moderator for the evening. I'm part of the Institutional Equities team at Ashika Stock Broking, where we write proprietary research for unique stock ideas and service some of the top public market funds of the country. I hold a master's in Biotechnology enterprise from Johns Hopkins and a Biochemistry degree. Before this, I had a brief stint at a healthcare-focused investment bank on Wall Street. Now let's begin today's webinar on how can businesses learn to be anti-fragile through crises. I would like to introduce our speaker for the evening, Mr. Robert Wolcott. Robert is the co-founder and executive director of the World Innovation Network, also known as TWIN, an adjunct professor of innovation and entrepreneurship at Kellogg School of Management, which is part of Northwestern University, and a managing partner with Clareo, a foresight and growth strategy consultancy. He's a regular contributor to Forbes regarding the impact of technology change on business, leadership, and society. Amongst all of this, he's also an active angel investor and has invested in multiple tech startups, and one such enterprise, the very famous crowdfunding platform, Indiegogo.com. We all know in India what's Indiegogo. Robert, on behalf of the team at Ashika Group and all our attendees, I welcome you again, and thank you for giving us your time. The format would be that Robert would speak for about 20 to 25 minutes, and that would be followed by a Q&A with pre-submitted questions that I'll moderate. Thank you all for the questions. I will try my best to accommodate them all. Over to you, Robert.
Great. Thank you, Ishita, and thank you to Ashika for the opportunity, and my good friend KK Raghava for the recommendations. So it's nice to be with you this evening or this morning, I suppose. It's hard to know in cyberspace what time of where the sun is exactly. But this is an important time for all of us. It is a crisis, but we as human beings have an option. We can be taken down by this. We can be become catatonic, and on the other hand, we can decide to act, and we can take it as an opportunity to become better. The reality is the only rational solution is to take it as an opportunity to become better. So let's figure out how to do that. And the framing that Ashika gave us today was to be anti-fragile. A couple of framing remarks before I go into my remarks, and I'm happy to field any questions later. First of all, I am not an expert. I've been to India many times. I always enjoy my trips to India, despite occasional logistical issues. It's a fabulous place, and I look forward to future visits. But I'm not an expert in your environment. And so I ask you to translate what I'm saying and what I'm seeing into your environment. And I'd be very interested to learn from you. If you feel like reaching out after this, I'm always available on LinkedIn, Robert C. Wolcott. I'm eager to learn from you because you're in the middle of it. We're here in a different environment, but in this crisis, we're all sharing the same ultimate objective, which is to overcome this viral scourge. Now, of course, there'll be more in the future, and this caused me to think about some advice that I've gone back to most of my life, and that's advice I received from my mother, which is this too shall pass. No matter how difficult and challenging anything might seem, things will work out. They won't necessarily work out the way we want them to, but they will work out. That's a fact that we have experienced over thousands of years. So this too shall pass. But the other thing she told me is, this too shall pass, and guess what? There'll be another crisis in the future. So it's just the nature of being alive. It's the life we've chosen to live and the challenges we've chosen to face, and they are so that we can become better. A more practical, pragmatic point at this point, and I'm going to talk about thinking about the future and about innovation during a crisis and all of this and where we're going over the next 5, 10, 20 years. But before I do, right now in the midst of the crisis, which as we've seen has had an extraordinary impact in China, has had a horrible impact in Italy, and I have very good friends and investments in China and also in Northern Italy. It's coming for us and it's ramping up. And as a very practical matter for businesses, businesses go out of business because they run out of money. More than any other factor, businesses go out of business because they run out of money. And so as I talk about all these lofty, important things to consider, always keep in mind that managing cash, I understand the severity and the importance of this. And to give some context, I have a business that I founded a number of years ago. It's a consultancy called Clareo. We're a growth strategy and innovation consultancy to large corporations. We have 20 people full-time. So I feel this directly. My partners and I feel this challenge directly, managing cash, and even more important than cash, it won't feel like this sometimes, but even more important than cash is keeping the team together, keeping your best people with you together. I want you to start right now thinking about, obviously we want to do right by all of our people. We want to do the right thing by all of our people. And sometimes that's difficult, but we have to do it for long-term reputation, for business performance, for morale. But frankly, I also want you to step back and think about who are the essential people in your universe, in your businesses, in your family office, perhaps, service providers, household staff, everybody that is really essential to you and your family and your interests. Who are they? And think hard about how to keep them safe and in good stead during this crisis. They will thank you for it. You will thank you for it. So cash and people. Now I want to shift to this question of fragility or anti-fragility. Fragility has to do with the likelihood of something to break, and something could be quite tough, quite strong, yet brittle at the same time, and under certain circumstances. And this is, I think, the key point. Circumstances change. And the fragility we see in our organizations, institutions, et cetera, is understandable because they optimize for the environment within which they exist. And they've existed for the past almost decade in a relatively stable, I know it didn't feel like it, but a relatively stable environment. And so as we exist in a relatively stable environment and we discover what seems to work, what makes us money, we discover ways to cut costs and narrow down our focus and become better and better at what we do within that environment, we optimize and perform better. But at the same time, we also set ourselves up, if we do this incorrectly, to become fragile if things radically change. And right now, in the current environment, things are radically changing. So the irony, or maybe the catch here, is that driving toward optimization during a certain environment can leave us open to greater risk and greater fragility as conditions change. Just like evolution. The fittest organism doesn't survive necessarily. The fittest organism, the most adaptable organism as things change, are the ones that survive. So we have to think about how to, during good times, optimize, become the best at what we do, the best ways we can, while also maintaining some level of anti-fragility, as Ashika called it, but I'll refer to it as resilience. How do we build some resilience into our plan right now and then also in the longer term? Well, I think of two things, and they both are afforded us by technology, which is ramping up very fast. But they're really a question of technology and people. And I'll keep coming back to people because ultimately none of this matters unless the people matter. So resilience, two things I'd like you to think about, and there's certainly much bigger conversation than this, but two things I'd like you to think about in terms of building resilience in your organization, both now and in the future. One is optionality, having options in various paths to market, various ways to recover from a situation, but also various options on the future. And then also agility, the ability to move quickly and effectively based on various conditions or objectives. So optionality and agility, to me, are two things that we should focus on attempting to create both during crisis, but especially before one. And recognize that when things are going well, we are biased in favor of eliminating optionality in order to optimize. Eliminating optionality in order to optimize, because options come at a cost. Building your disaster relief plan, your contingency plans, shoring up the cybersecurity of your systems, that all comes at a cost. But I'll tell you, if they're compromised or if we end up in a crisis and your company or organization can't adjust, then the cost is existential. So we must think in terms of optionality. And then agility, of course, is our ability through technology and our people to respond, move, adjust very quickly. And these both come at a cost. Optionality and agility both come at a cost. But in a world where it's likely we'll see more scourges like the current coronavirus in the future, and our medical systems will get better, of course, but nonetheless, we should expect, the prudent thing to do is expect these types of challenges to occur again in the future. So the irony is that when things are good or reasonably good, or even a normal recession, and I put normal in quotes, we tend to optimize, and optimize drives out all optionality because it's seen as a cost. Think about your innovation portfolio. When things are tough, we cut as much as we can possibly cut. And when you cut innovation investments, which aren't bearing fruit yet, those rupees, those dollars, they drop right to the bottom line. So it's sort of like a drug. If you need to solve your problem, you can solve it right now by getting rid of all those silly innovation projects. The problem is, what happens is the world changes around you. And while you're cutting all your optionality, your innovation projects, betting on the future, while you're cutting all of your optionality, the world outside is changing. And so eventually, by cutting all of that optionality and focusing more and more of your attention on being the best of what you are right now, eventually the customers don't want that anymore. Eventually the market is shifted and somebody else is providing that value because they don't care about your products or services. They care about the value they get. The customers care about the value they get. And so now this notion of resilience is not just about technology, which provides us a lot more flexibility and the ability to respond faster to change. And I'll come back to that. And also about your people, who are the absolute pivotal component of this equation. But within people, we have mindsets. And don't have time to talk a lot about it today, but a mindset of preparedness, a mindset of resilience, and if you have any members of your team or your family or your companies that have served in the military, you might have a conversation with them about notions of mission objectives and resilience and disaster response and things like this, because they have a tendency to have either been through challenges like this and or been trained in issues like this. So I'll give you an example of where a mindset and recognition of challenges sometimes breaks down. So we in business and government as well, but especially business, have this attitude: we're going to make it through, we're going to keep doing what we do, and we're prepared and we know better than anybody else how to do this, which is generally true, except when the environment changes markedly, as it is now. And a very specific example of this. A few weeks ago, I was watching the financial news here in the United States, and they had an interview with the CEO of the New York Stock Exchange, a very, very capable woman, exceptional executive of a financial market. And she's standing on the floor of the New York Stock Exchange. And the question to her is, given this COVID-19 pandemic that has now been termed a pandemic, do you foresee the New York Stock Exchange physically closing and going all virtual, all digital? And her answer was, it was a perfectly reasonable question at that moment. Her answer was, no, we're going to keep this exchange open. We have digital systems, but boy, we've got new cleaning protocols on the floor. We are prepared. We believe we will be able to keep this floor open throughout the entire pandemic. We're prepared. That sounds like a good answer normally. She's saying, have confidence enough, we can make this work. We know what we're doing. But it seemed to take a blind eye to what was really going on and instilled false confidence. People will quickly figure out when someone is, and I do not believe she was lying. I do not believe she was lying. I believe she fully believed what she was saying. But this has to do with the mindset. Hey, we've been through a lot. We always keep the exchange floor open, physically, the physical floor open. So we're going to do it again. As opposed to a better answer, a much better answer, which would have been forthcoming and honest and clear, would have been, we have prepared as best possible to keep the floor open, and we're going to do our very best. But I'll tell you what as well, if it becomes a requirement to protect our people, our members, our partners, to help in the national response, the cities in the national response to this virus, we are fully ready to close the floor and go to a fully virtual trading. Let me give you an example. X%, a very large percent, by the way, of all the trades on the New York Stock Exchange already happen online. So we are ready to make that transition, but we will keep the floor open as long as it is prudent to do so. You see, these two answers are very different. One is, we are going to make this work. Well, and the other is, we're going to make this work as long as it's prudent, and we are fully ready to make the transition when the time comes. Well, we all know the outcome. The New York Stock Exchange, as with all other physical exchanges, has had to close down its physical exchange floor and transition to digital and online. And guess what? It's worked very well. There are a few people who aren't happy about having the moment-to-moment knowledge that comes from human contact, but we all are facing that challenge right now in this environment. So there's a mindset to do with this. Now, let me shift for the remainder of the time to talk a little bit about where we're going, and then a couple of things you can do right now. Where are we going? Well, in Forbes last week, or maybe a little early last week, I wrote an article that called "Crossing the Digital Rubicon." So, and I truly believe this is not hyperbole. We've been moving toward a more and more digital world, and companies, organizations, governments have been told to go through what people call digital transformation. And it sounded like, sir, I'll take some digital technologies and I'll improve some of the stuff I already do. I'll use technology to be a little better at what I already do. That's not digital transformation. That's not a bad thing necessarily, but it's not digital transformation. True digital transformation comes when your people's mindsets, when their approach to work, when they're thinking about business models, when the capabilities in the marketplace with customers and partners and suppliers, when that becomes transformed to recognize digital first. Digital as the first line to market, to serve markets, to understand markets, etc. And what COVID-19 has done is force most of us into the digital world much faster than most of us, not all of us, but most of us were prepared for. So this is much more important transition than what many people are talking about, which is, oh, people are getting the experience working from home now. They're being forced to work from home online. That's certainly true, but if that's all you take from this, you've really missed the point, the larger point. I'll give you an example. So over the past few weeks, month, as this crisis has been rolling out, I've been keeping in touch with members of the World Innovation Network, or TWIN. TWIN is something that we get together occasionally in person, but also keep in touch throughout the year. It's a group of innovation and growth leaders from 30 countries, from business, government, nonprofit, the arts, academia, defense. So we're a very broad group. We like to say, never leave serendipity to chance. This, by the way, is helping to provide optionality for each of us by having a broad, diverse social network of trusted relationships. And this is the most important factor, trusted relationships. So one of those trusted relationships is with the CEO of a company called UL, which for a long time was called Underwriters Laboratories. They do evaluations of products for safety, and then they provide a UL indicia or symbol to say this product has been tested and is ready for market. And Jenny Scanlon, the CEO, and I were talking about a week and a half ago, and she said, you know, as part of our service to our customers, the companies that are providing products, we have to go and recertify, do an audit essentially, and it has to be unannounced. It has to be a surprise for obvious reasons. So she said our teams go all over the world, show up at manufacturing facilities and offices unannounced and say, we're here from UL, we're here to recertify your product safety. And you can imagine with this crisis, it makes their process very difficult because they can't get on planes and they can't go to offices. And even if they do, there's no one there. So a few weeks ago, a month ago now, Jenny and her team said, you know what, we need to, as quickly as possible, transition all of our work, all of our audits, as much as we possibly can, to online, to virtual, to Zoom meetings, for instance. And they put the word out, they put a team together, and then within 2 weeks, from the time they decided to do this to the time they were doing audits, not just practicing, not just playing with it, but doing actual audits with customers, was 2 weeks. Today, the people who are doing the audits are saying, you know what? This is actually better, with a few exceptions where being in person is required. This is actually better, because not only can I do the audits online, I can do more audits in a day, and I'm home with my family for dinner. I don't have to fly to Bangalore and stay at a hotel and go to I can do this online, and I can be at home with my family for dinner. The customers, as you might guess, are saying, we like this more too. You don't show up unannounced at my manufacturing plant for most, again, there are some exceptions, for most of these audits. Now we can do it online. You can pop in whenever, and it's less intrusive. So the customers like it more, the team members like it more. It's a win all around. And here's Jenny's insight. We've been thinking about this at UL for a few years. What more can we do online? She said, I can tell you what would have happened before, and this is probably true at most companies. We would set up, if we decided we wanted to go online with our audits or whatever product, pick your product at your company, we would put a team together, and then we would hire consultants, and then we'd have a project timeline for 3 months, 6 months, 9 months, and we would study it, and then we would do a pilot, and then another pilot, and everybody would come up with all the reasons why this won't work. All the reasons why stuff's going to blow up and we can't do this. And guess what? We can, and we did in 2 weeks. One of the things the crisis allows us to try is experimentation at a mass scale. It allows you to mobilize your troops, your people, to do things that would have taken months before, to do things in a matter of weeks or perhaps even days. So I ask you to think about what are some fundamental opportunities for you to transition offerings, products, service methodologies online and put a team together to try and make that happen. Another comment I'll make here is the crisis offers the opportunity for people all over the world to think about how to leapfrog tradition, leapfrog where we in the United States and Europe are, for instance, or East Asia, where we've had infrastructure and all these things for a long time, but we also have a legacy. And you in India have your own legacies, of course, with business and process and approach, but with new technologies coming out quickly, some of them far cheaper to allow us to do the work we want to do, I challenge you to figure out how you can find business models, technologies, digital technologies, et cetera, in order to leapfrog and transform processes as opposed to just trying to optimize the ones you have now. And a crisis is the best time to be thinking about this. Now, again, come back to the beginning. Cash is a problem. I get it. Keeping your people together is also a critical challenge. But for your best people, a great challenge is to ask them to think about the future. So here's one thing I would recommend you consider doing. Everyone during a crisis will be focused on the crisis and they'll be focused on the core business. That's mostly what you want. You mostly want most of your people working on the core. But if everybody's focused on the core and the crisis, then nobody is enabled to think about what's next. And as the leadership, as the ownership of the business, your responsibility is to think about what's going on now and how we navigate through, but also what's next. And no one in your organization can really have a strong impact on that unless leadership and ownership give them the ability to do that, enable them to do that. So here's a simple recommendation. And this is something we've done at my firm, Clareo. Again, we only have 20 people full-time. But even so, we've identified 2 of our people and said, the 2 of you, we would like you to focus, certainly pay attention to the crisis, but focus all your attention on what happens after the crisis. What should we be preparing for now? How should we be thinking about 3 months, 6 months, 9 months from now? Whenever it is, when we emerge, how can we emerge better? And if you go to 1, 2, 3, 5, depends on the size of your organization and what you do, but if you go to a few people and you say, you have the authority and the ability, in fact, the requirement to think beyond, to think longer term, then, and you tell everybody else that as well, make sure they know that they have to be engaged in all of the near term, making sure that the business is healthy and all, but beyond that, their focus is the longer term. Then they will be enabled to think about the longer term implications of this challenge while everyone else is taking care of the house and protecting the business in the meantime. Finally, through this process, think about your people, communicate with your people, and you're going to need to do it a lot more than during normal times, a lot more than you ever imagined. I learned, and I have a Forbes article from just less than a week ago, where I learned from State Street Bank, the 4 C's, now it's 5 C's, and I'll share them with you, that they invented during the crisis. This is a major banking institution in the United States with about $15 billion in revenues and $35 trillion under custodianship. So they've developed on the fly 5 C's they use to think about navigating through. 1 is care, caring for your people over and over and over again. 2 is communication, much more than you imagine. 3 is clarity, making sure people are clear about what your perspective is as a leader, as an owner, and where we might be going. And when you're not sure, being clear about that too. Don't act like you know where things are going to work out when you don't. 4 is collaboration. Care, communication, clarity lead to collaboration. They support collaboration. We are all in this together. And finally, calm. As a great example of this, I urge you to look up the CEO of Marriott Corporation, the hotel and lodging resorts company. Look up his video message to employees that he posted on Twitter. It's had 1 million views now, I believe. Arne Sorensen. It's a fabulous expression of care, communication, clarity, and calm. With that, I'll conclude. with some words from my intellectual hero, William James, the American pragmatist, philosopher, and psychologist from 100 years ago. Act as if what you do matters, because it does. Thank you.
Thank you, Robert. That was very insightful. Quickly now, let's head over to Q&A. So, Robert, I've heard you previously speak about anticipatory shipping and 3D printing, a supply chain that is closer to moment of demand. Since some of the manufacturing will potentially move away from China for obvious reasons to some other places, one potential being India. Can you elaborate this in reference to manufacturing disruptions?
Yes. So we don't have much time, but I'll say a little bit, but you can also look up an article from, I think 2018 or 17 called The Future of All Business. Look up my name and the word proximity, because proximity describes where all industries, all businesses are going in the future. And that is digital technologies push the production and provision of products and services ever closer to the moment at which they might be demanded. Let me say this again, because this translates into every industry. Digital technologies writ large, so I mean all kinds of digital technologies, Internet of Things, data analytics, big data, even rooftop solar energy generation. That doesn't sound digital, but it is digitally enabled. All of 3D printing, as you mentioned, Ishita, all of these technologies allow us to distribute sensing, analytics, the ability to make decisions, production, like 3D printing, at smaller and smaller locations all around the economy. And thus, over time, over the next 5, 10, 20, 30 years, we will progressively push more and more of the value creation ever closer to the moment at which it might be demanded. The reason is that ultimately that will be more efficient. Today it's not, but for some applications it's starting to become more efficient. Now, talking about 3D printing, I'll give you an example. In the United States, 25% of all plastic replacement parts for automobiles cost more to ship than they do to manufacture. 25% of all plastic replacement parts for automobiles cost more to ship than they do to manufacture. So one would believe that over the next 5, 10, 20 years, 3D printing, it's not going to move in 3 years from now, there'll be no huge plants in China. Of course not, that's ridiculous. But it'll start at the edges. And 3D printing will start to become economically viable for certain applications. And when they do, then people will become better at using the technology. And then more and more applications and products will be 3D printable. And so what does this mean? Well, 30 years from now, we will still have some big plants in China and India and Mexico, United States, Germany, of course. But we'll also have some mid-size operations closer to points of demand. We'll have some production capabilities in neighborhoods. And eventually, not in the too distant future, in fact, we'll have a 3D printing machine on our counter at home. And you'll be able to print certain things, and over time, more and more things at home, rather than having to rely on a supply chain, which today is optimized for scale manufacturing at a distance. So as your members and clients and everyone on this call, as you think about where your investments are going for the long run, I want you to take a look at 3D printing and the related technologies and see, pressure test, future test your ideas about building large manufacturing facilities. Because the old model is the larger my manufacturing facility, the lower my costs, and it makes me more competitive. And that's still true for the most part, but that's starting slowly to change. And I want you to pressure test that investment concept. You're going to have over the next 10, 20 years more demand in India. So whereas today you need to rely on serving external demands, increasingly you'll have more and more demand internally. I know that's challenging right now in this environment because people are going to go through tough times, but I cannot imagine that 10 years from now there won't be much more demand inside India than there is today. I think that's almost axiomatic unless everything falls apart. That was a short answer to a very big question.
Just a quick follow-up question on that. Robert, what does this then mean? I mean, when manufacturing moves closer to point of demand, what do you think that means for logistics and transportation businesses?
Okay. So again, the good news is that this change for most things won't happen in 1 year or 2 years. This change is going to happen over the next decade and will still be ongoing 10, 20 years from now. So you have time. This is an example. Proximity, this trend across all industries that I mentioned, is an example of foresight. It gives us clarity about where the world is going. Now, we can't see the future in detail, but we can see the contours of it. And proximity gives us a notion of the contours. So for distribution, you asked about distribution and supply chain, or?
Logistics and transportation.
Logistics and transportation. So for logistics and transportation, this is your opportunity to do what you do now, which is optimize how you bring customers the products and resources that they need at the place they need it. But to rethink that and say, if I were starting from a clean slate, which I know for the most part we're not, some of us are, but for the most part we're not. If I'm starting from a clean slate, given the technologies and the infrastructure and the capabilities today, how would I build it out today? And then think about, don't run out and do it. Then think about, where is it likely we're going to be in 3 years with technology? Because by the way, if you do a little bit of work, you can see where we're going to be in 3 years with technology, with rare exceptions. Most of the companies in the space are already working on that. They're often messaging that to the marketplace. So you can find some people who have a sense for where we're going to be in 3 years with most technologies. And then do some thinking about 5, 10 years out. That's where it gets fuzzier. But you can see indications of 10 years out. And we don't have time for it, but I can give you a number of examples over the past 20 years of my career where we did this at Clareo with companies where we were able to find weak signals in the marketplace that 10 years later became the dominant factor. I'll give you one quick example, and that was hydraulic fracturing or fracking. It's a long story, but 15 years ago, fracking already existed. It's existed for 40 years, but it never worked very well. And 15 years ago, it was getting a little bit better, but nobody in the global oil and gas industry believed it would amount to anything important at all. That would never be an important factor. 12 years ago, no expert believed it would amount to anything significant. Yet in the past decade, it has changed the global geopolitical picture, not just oil and gas industry, but geopolitics. And those indications were already out there. Now at that point, 12 years ago, when we were working with our client, we didn't say, oh, shut down all your core products, move into this process, get rid of everything and go. Because we didn't know if it was going to be big. Instead, we said, this is a leading indicator. And this is what I want you to look for, leading indicators. Because we manage our businesses based on revenue and profitability, which are lagging indicators. We need leading indicators. Keep your eye on hydraulic fracturing, we told our client 12 years ago. And if it starts to pick up, be ready. If it doesn't, no big deal. You just paid attention. But if it does start to pick up, you need to be there before the competition.
I think I have to ask this. This is not in my list of Q&A, but if I'm curious, I'm pretty sure the attendees are too. Is there any trend, Robert, any trend or any such change or disruption that you are foreseeing right now? It could be American, it could be sector agnostic.
Well, proximity. Proximity is one that I've been looking at for 5 years and watching it roll out. And that's why in this article that I mentioned about the digital Rubicon, I said that the COVID crisis pushes us into the digital and virtual space, pushes people who were avoiding it, resisting it, ignoring it, into the requirement to experience the digital world. And they're finding they can do things that they didn't think they could do. They're finding that in some ways it's better than they thought. Now, it's still not as good as sitting across the table from all of you, lovely people at this point. But by the way, in 20 years, it will be as good. Maybe less, it will be as good. So it's pushing people to experiment, and as a result, it's accelerating this digital transformation. And the other factor that's out there that's coming fast is 5G telecommunications capability. And as that rolls out, and I know it will roll out in different rates in different parts of the world, but as that rolls out in different parts of the world, that starts to rip apart existing processes. I'll give you because it provides speed and decreases latency and allows us to distribute, which is the key to proximity, allows us to distribute our sensing, our decisions, our manufacturing at smaller and smaller locations all around the economy. It accelerates proximity. Quick example. I was with a major bond rating firm team about a year ago, and they were talking about one of the major bond raters in the US. And they were talking about how excited they were about a team they put together to take one of their offerings, one of their products, that currently takes 2 months from the time the customer signs the contract to the time it's done. It takes 2 months. And they were very proud of the fact that they put a team together to figure out how to make that happen in 2 weeks. Now I said, you know, that is impressive, but what if somebody can do it in 2 minutes? And we looked at it and said, you know what, this is a data-based analytical framework, and artificial intelligence can't do it today. You can't do it in 2 minutes today. But is there anything scientifically, conceptually, theoretically standing in the way of sometimes someone being able to do the same thing in 2 minutes or less? And the answer was clear, no. So they would spend 6 months taking a process from 2 months to 2 weeks, and then later somebody else does it in 2 minutes, and they've wasted all of their time. So I'd say proximity is the most powerful trend going on right now and will be for the rest of our careers.
Got it. Moving on to, like you spoke about proximity, what the businesses have optimized till now has been efficiency. It has been a very, we like to call it JIT economy, just-in-time economy. Yeah. You want minimum inventory, so your asset turns and your return on equities are better. But now businesses after COVID-19 will have to optimize for redundancy, which is diametrically opposite. They will have to have backup plans. Investors, in fact, before investing are going to ask, how have you optimized if in case COVID happens again? Right. You know, there might be a scenario where redundancy might get incentivized. So what are your thoughts on that?
Well, it'll look very different in different situations. So what I challenge you to do is figure out how can we have both. Now, we'll never be able to entirely have both, because if you have redundancy, if you have flexibility, agility, there is a cost to that, but the cost to having that is coming way down. And as we see in developments just in the past decade and currently, the cost of not having that is going way up, the risk that you open your organization up to. So how can we try and have both? Well, this is where digital technologies become the key, because they can distribute my ability to respond in smaller and smaller locations, and so therefore provide me with natural redundancy and an ability to respond in the moment to demands in various areas. And they can take out some of the human touch in the process if we're talking about a viral scourge like the one we're dealing with right now. And so it's not the case that, and by the way, if you take an existing process and you incrementally optimize it, so you're getting a little bit better, where you'll never get is over here. You'll never get over there. But by trying a very different approach, a different business model, a different process, a fundamentally different technology, you have the possibility to get all the way over there. Does that make sense? So in that process, you can create some resiliency, and I'll use the example of the internet. So the internet, as many of you know, was originally developed in order to provide a communication system that survives a nuclear attack. That was the purpose when it came out of DARPA and the US military. And one of the ways they did this is they said, let's have a bunch of systems all connected together. And so if a large percentage of those systems are taken out by a nuclear attack or any attack, we still have these systems over here that can continue to communicate, and so the redundancy of the system, and also the way that TCP/IP sends information out and back, which came later, obviously came much later with the web, provides a more resilient dynamic system. And so digital technologies offer us the opportunity to become better, faster, cheaper, and more resilient.
Got it. My next question, I would like to pivot slightly to investing. Robert, as we all know over here that you've invested in multiple successful ventures. I mean, Indiegogo is one. Loop
and some unsuccessful ventures.
And some unsuccessful ventures. I think that comes with the job. So from an investor perspective, Robert, what are the qualities that you are looking for, both in terms of startups and entrepreneurs, that you would personally look for before investing in a post-COVID era?
Well, honestly, I don't think that changes what you look for as an angel investor. And remember, angel investing is very, very early. Usually they have no or very, very little in revenues. And that's a whole different discussion we don't have time for. But what you're looking for as an investor in the very early stages are number one. One is, do you think the idea makes some sense that it might actually have a shot at being big and working, proof points, et cetera, but especially the team. Who are the people in whom you're investing? Because at the very early stages, you're really just investing in the people more than anything else. Because in the very early stages, whatever they think they'll be doing 3 years from now is not what they'll be doing 3 years from now. It will have changed markedly in the meantime. And so you're looking at that individual or those individuals and saying, do they have the right attitude, the right skills, backgrounds, relationships? Do you trust them? One of the biggest factors I look for is, do I feel I can trust these people? And because that's what's going to take to get through the early stages into something that's successful. So I don't think COVID changes it too much, except our opportunity as investors is to now and later on, is look and see how each of these leadership teams navigates through this crisis. Some leaders will percolate up to the top, will stand out as people who really can keep people together and keep things moving and just figure it out during very difficult times. And others who have a lot of talent, who are maybe brilliant, aren't able to cope. And so today, but then also in the future, when you're looking at who people are and that you might want to invest in, how did they cope and confront COVID? And by the way, just because their business fails during the COVID crisis doesn't mean that they don't have great potential. And so it's not a simple, oh, business failed, I'm not investing in them. In fact, in many cases, and investors around the world, early stage investors will say this, in many cases, if somebody has all the other traits and they've already been through a major failure, that makes them more attractive because now they've failed on somebody else's money and they experienced failure. So, and they're right back there ready to do this again. And so sometimes it actually makes people better.
That's an excellent point. If you're going to fail, please fail on somebody else's money before you.
And by the way, it's a lot easier to explain why you failed when you're in the midst of a crisis. So use the crisis as an opportunity to clean house, to do the tough things that are really tough during normal times, because people are expecting tough things right now. Any news you've got will be drowned out by how challenging the situation is for everybody.
Interesting. So taking on the flip side, that same point that you just made, for entrepreneurs who did survive this crisis, let's say entrepreneurs who are running growth-led startups or growth-dependent startups, how will they ensure that A, they don't lose market share? How do they maintain costs? And more importantly, how do they justify taking risks and spending the money?
You mean the entrepreneurs?
Mm-hmm.
Well, that's a moving target every day. The one piece of advice I would give is we go out of business because we run out of cash. So there is that. And we have to figure out how to push that as long as we can during the crisis. But even in crisis, the most limited resource we all have is not our capital. It's the attention of our best people. And each one of us, the most limited resource we have is our own personal attention. And so where I would start, again, cash is fundamental. I can't say ignore it, don't. But attention is the thing that you can control for yourself, and then in various ways for the people in your team. So think in terms of, what are my people focused on? Where is their attention? Because if everyone, as I said before, if everyone's attention is on, oh my God, how do we get through the crisis? Then nobody's thinking about what's next.
Got it. Brilliantly put. My next question is nothing in relation to what we've talked so far. This question is around the role universities play in innovation. Like I mentioned that I lived in the US for a bit, and I saw that universities are playing a crucial role when it comes to innovation in the United States. But because essentially it's a win-win situation. Universities keep innovating in the corporate world, and they have this excellent juncture available where they do tech transfer. But in India, that is not really getting harnessed as much, and it's not as developed. Students don't get involved in corporate innovation at all. Would you have any, since you also are involved with Northwestern or Kellogg, do you have any advice or direction that possibly India can look towards to build this kind of an ecosystem?
Well, that's a big challenge. I have a lot of thoughts we don't have time for right now, but a couple of reactions. One is very few universities do it well in terms of transition out of the university. There are few exceptions. Even there, it's difficult. I mean, taking early stage technologies or research, heaven forbid, really early stage research, and then translating it into a marketable product is really hard. Where I'd look for some guiding lights would be like MIT has a pretty good program for transition compared to other universities. The University of Utah, believe it or not, last I looked was 5 or 6 years ago, seemed to really be doing well. Northwestern has done very well, my university, but in general, we could be better. We definitely could be better. But note that in the ratings, we were #1 for a number of years, but the reason was one product, and it was a pharmaceutical product. And so it was, it generated about over $1 billion with a B, over $1 billion of licensing revenue to the university. So of course, what happens when a university sees that, they say, oh, we want that too. So all the money goes into therapeutics, into your area, right? So another thing I would recommend is look at how the life sciences industry does this, because they have to be very focused on upstream research, really early stage research, and figure out how to go through a process. But on the other hand, they have the advantage that, as annoying and difficult as it is, there is a defined process to take an individual drug product or a medical device out to market. Most industries don't have that kind of structure. Again, it can be annoying and frustrating and sclerotic, but there is a process, and everybody kind of knows the process, and you basically follow it. So, and the products you're finding, the research is discretized into very specific single or, family of products. So there are some things to learn there, but they have to be translated into other industries and other environments. So those are a couple of places I would look. I love universities. And you mentioned Northwestern, and I also recently joined Booth at the University of Chicago as an adjunct professor. And I love universities, but I'm going to put my glasses on in order to quote Henry Kissinger, who said, university politics are just so vicious because the stakes are so low. So always keep that in mind, my business friends and government friends, when you're dealing with your university friends, who are wonderful. But the equations in the minds of researchers are very different than they are in the minds of normal human beings. Once a researcher gets that paper published, they think it's done. Oh, you want to commercialize this? Great, here it is. I'm all done. I got the paper published, so go out and build it. And you say, well, I need some development. They're not interested in that. That's not their incentive structure. And furthermore, one last thought. With rare exceptions, and there are exceptions, not very many, one of the worst ideas is if you're trying to commercialize a product. If other things, that's fine. But if you're trying to commercialize technology and get it out to market and scale it up, one of the worst ideas is the professor CEO. The professor who's currently a professor, who's also CEO of his or her company, is almost always a bad idea. It doesn't feel like a bad idea to them. And it looks like, because, oh, they're the experts, so they know everything. They know about the technology. They know about the science. They know about the research, which is utterly, completely, existentially different than building, designing, launching, manufacturing, servicing, selling. Totally, utterly different, and leading people. So those are just a few thoughts, and I think we're coming down to the end of our
Yes.
time together today.
Absolutely.
And I hope it won't be the last time.
Yes, absolutely. Very rightfully said. One person's dream gets achieved, and that is when the other person's dream starts.
Yes, good.
So,
Did you just make that up?
I did, yes.
Oh, well, there we go.
I worked very closely in biotech entrepreneurial endeavor in the US. That's how. Anyway, before I let you go, Robert, I have one final question, and this is one question just very open ended. We ask our every FutureBets speaker to answer this question.
Okay.
What is Robert Wolcott's future bet?
In addition to my two daughters who are 9 and 10 and a half, those
Yes.
are my biggest future bets.
In addition to that.
Well, I'll answer that in a little bit of a different way. I think about life. I love business. I love technology. I love so many things. But what makes life worth living are the trusted relationships we build with others in the world. And so what is most important to me, and the bet that I make on the future, I make every day by meeting and building trusted relationships with wonderful people. So I'll leave you with that.
That's fantastic. We as a financial services company, that's our motto. That's fantastic.
Absolutely. If somebody doesn't trust you, I see it on the screen behind you. Try it and trust.
Exactly. Absolutely. Thank you, Robert. Would like to express my gratitude for agreeing to speak with us. And to all the attendees who are listening, like Robert very so kindly agreed that he's open to questions and comments. And if you have anything, please do reach out to me or your contact at Ashika, and we'll send that to Robert for his insights on specific questions. And for our other speakers and webinars this week, check out our website. And I think, yeah, that concludes it. Thank
Great.
you, Robert.
Thank you. Stay safe.
Take care.